Okay, you've floated the possibility of triple-digit silver. I've heard that one for a while. If central banks do start accumulating silver, what does that mean for prices? Let's bring it back to triple-digit silver. What catalysts could realistically take us there?
A lot of catalysts. I mean, I know the silver market is so small. It's so small that it could easily see quadruple or so from these levels, and the same way as the mining industry as well, right? I mean, if you look at the entire, including gold, if you look at the entire precious metal space relative to the overall market or the overall amount of net worth out there, these markets are just very small relative to real estate and the bond market and the equity market. There's the private equity market. I do think that the entire space of precious metals is way too small relative to the number of imbalances we have worldwide. So it would be very possible to me that the silver would go to triple digits, and not low triple digits. It could go much higher. And the same thing applies to other. I don't want to be saying this only specifically to silver, because I think it applies to other things as well, not just silver. Silver just happens to be so exciting for a lot of reasons, because we know it's being used in an industrialization side as well. So if you think about the AI arms race, the onshoring, and this gold rush happening across central banks that could include silver at some point, it just makes you, think about optionality, right? I remember speaking with a very intelligent investor one day, and he said to me, what I like about gold, this is years back, what I like about your thesis on gold, he said to me, is that there's so much optionality for that to work. And going back to that, I mean, how much optionality we have on silver prices today. You can make the case, just because gold to silver ratio is too high, silver is cheap. You can make the case that silver is been very useful for lots of industrial purposes, and it should be a lot higher. You can make the case that just because of inflation, hard assets should be higher, and silver is too cheap. You can also make the case that because central banks may one day buy it, silver should be a lot higher. And then you can talk about the monetary side of it and all that. And so there's so many angles you can go here, and none of us know how to perfectly model this. But I guess, wake me up when gold to silver ratio is at below 40, 30 or so, and I will revalue my thesis from there.
Well, let me put this point forward to you, and that is silver price suppression, because some argue that the silver price has been suppressed, that it's been manipulated, that for one, there's way more paper silver out there, derivative products of silver, than physical silver, and it makes it very easy to manipulate the market. And that's why we haven't seen triple-digit silver, and that's why we may not see triple-digit silver. Do you buy the theory of silver price manipulation and suppression?
Look, these things could happen here and there, right? And the same way as you can see manipulation in other markets, ultimately, price will reflect its intrinsic value. And I firmly believe in that. And in the case of silver, if that's what's happening, ultimately, that's not going to, it's going to be very difficult to suppress that. And we're going to see something crazy. I think that a lot of people, look, I don't want to get into the specifics of that thesis, but I do think that it's, I think silver ultimately will be driven by its intrinsic value and not because of manipulation. I think that doesn't end well, and in terms of price movements, and most likely that, if anything, that would only increase the likelihood of seeing an explosive move, so to the upside. So yeah, that's, I guess you can add that to your optionality idea, and of another thing that could add to silver prices going up a lot.
So you're putting it in the positive case column, in that if it is suppressed, then when that suppression eventually fails, that's just going to rocket silver even higher.
Think of a beach ball trying to be held under the water for a long time. Like that's the way I think of silver. If that's the case, eventually goes a lot higher, right? And explodes the upside if that's the case. And so, yeah, I think eventually and inevitably will follow its intrinsic value. And so otherwise I wouldn't be investing in this, right? If I didn't have
Of
that
course,
view,
yeah.
I mean that just seems like the most boring thing to do, right? I'm gonna buy a metal that I don't think it's gonna move. What am I doing? So yeah. Well, it's funny when I said that, somebody questioned that and tried to get me to answer the question of like why would any central bank would buy silver, and that lacks to understand, in my view, the meaning of silver itself and the monetary system and its history as a monetary metal, that it is normal that people are conditioned to not consider that as a possibility because we haven't seen that in a very long time. Ultimately, a major gold rush that we're seeing now, we should call this what it is. It's a gold rush. And if we're seeing that, eventually we're going to see a silver rush, in my view. And that silver rush, it's not driven by industrialization and all that. I mean, while I think that's a great thing for silver and it's going to create demand, it's going to be, solar panels, and silver is used in a lot of technology devices and so forth. Great. That's all a plus. Wait until you see the monetary aspect to start really being priced in the metal. That's not a $45 ounce, asset. It's way higher than that. And the fact that we're seeing silver approaching new highs with the gold to silver ratio still at 80 is one of the most bullish things I've seen. And instead, a lot of investors are seeing gold prices go up 2% and silver goes up, I don't know, 0.5%. And they're discouraged. And they're thinking that this is, the silver has lost its shine and it's not worth any what used to be and so forth. I love it. I think it's one of the most attractive investments I've seen in my career. And the fact that you can get leverage to silver by owning a mining company that still produces silver sub $20 an ounce is just insane to me. And so, we own the fourth largest silver mine in the world. And I don't think it's unique to us that these mines are being so profitable. But I also think that people are not understanding the level of profitability we're seeing. The other day, today actually, I was curious to see, are mining companies expensive? I was trying to answer that question myself. And so I went there and I start checking what prices they're trading today, valuations relative to how much money they're making. And in a lot of ways, back 1 or 2 years ago, we used to make those assumptions and say, well, looking at the estimates of earnings, these things are very cheap. Guess what? The realized earnings of these companies are coming in so high that they're cheap historically today. And I don't think that's going to change anytime soon. The biggest question for a mining company today is how do they secure their cost structure so it doesn't impact their margins in the future? So what am I saying? Like your gold to silver, your gold to oil ratio, your silver to oil ratio, try to hedge your energy cost. Hedge your energy cost at all costs, because that's your biggest risk right now. I do think that that's your biggest risk as a mining company. And so we are in a wonderful environment. It would shock me if we're not at all-time highs in 6 to 12 months in silver. It would shock me if we don't go to crazy levels in the next 12 months, meaning substantially higher than the prior peak levels in silver prices. So I think this is one of the most exciting times I've seen in my career to invest in this space. I do. And I think it's happening already. I think a lot of these countries, including China, are buying well above the silver price today. They're paying a premium to accumulate the metal right now as we speak. We're seeing this in our own mine. We see this in other mines. It's happening across the globe, and people are not paying attention yet.
How do you see silver then being reintegrated into the monetary system? I mean, expand what you mean by central banks seeing it as a monetary asset.
Well, I think that a lot of people try to consider the idea that we're going to go back to the age of having gold and silver coins, and we're going to be going to Whole Foods and buying milk with. No, that's not what I'm saying. I just want to be clear. I don't believe in that. I don't think we're going to go there. So I just think the value of the metal, once you start looking at the valuation of the metal as a monetary asset, it should not be 80 times the price, or have an 80 ratio with gold prices today. That's just incorrect. And if you are operating under that assumption, and so I think it would be normal to see sub 40, sub 30 in that gold to silver ratio. And if that's the case, you start making assumptions of what prices would be. And silver is extremely volatile, so it won't be as stable as gold. I mean, we're going to see big spikes and big declines. So, you got to be very careful of how to manage a portfolio with that type of exposure. But today we're just extremely cheap and just gaining momentum for a major breakout. And once we see that, we could see triple digits in silver. I mean, yes, it would be very plausible to see that, in my opinion.
Triple digits in silver, but again, back to the central bank idea here. I mean, we have seen India importing some silver, as I mentioned earlier. Saudi Arabia has invested in some silver mining ETFs and some silver ETFs. Again, this is probably the sovereign wealth fund of Saudi Arabia, not the central bank necessarily. But give me sort of your reasoning, Tavi, why you see central banks buying silver as a monetary asset, and do you see that as the physical asset? How do you see them investing into silver?
Well, let me frame this differently then. Think about this. We're not talking about people or central banks accumulating Bitcoin, and we're questioning if there could one day accumulate silver. Think about that, right? I mean, that wouldn't surprise me at all. I could see copper one day. Who knows? What if they have a combination of oil? What if they have a combination of commodities, hard assets? The name of the game is hard assets, not just gold. I think if people are thinking this is just unique to gold, I think they're missing the point here. It's not unique to Bitcoin either. It's unique to all hard assets, right? It's unique to oil. It includes oil, includes silver, includes copper, includes every critical commodity we have here. And those that have had some level of history with the monetary system are going to be in very high demand for obvious reasons, because we have too much in the macro world. We have too much in imbalances that cannot be fixed by a deflationary shock. They have to be fixed by an inflationary era. And so we're probably going to inflate our way out of these issues. And as we do that, none of us own enough hard assets, in my view. I think it's going to be a very, it's going to be very opportunistic for those that are paying attention to those trends.
Give me the bear case here, Tavi. Very quickly, what could derail your thesis? What could take the air out of that beach ball that's trying to break out from under the water? What's the bear case against silver?
The bear case is that we're not in an inflationary era, that we have a lot of productivity being driven by AI that doesn't actually need a lot of infrastructure. That's actually just real value in the economy, that GDP continues to grow. We're able to get out of this debt problem because of all these productivity changes. The debt that we thought we had, we don't have it anymore because we're growing our way out of it without the need of inflation, just through an effective productivity. And if that happens, then gold is not worth that. Actually, the modeling that we were talking about for gold prices being 30% lower would be conservative, would actually be a lot lower. And central banks are very wrong. They shouldn't be buying gold at all. And they're probably going to reverse that trend. And, that's, if you believe in that, and we're probably going to be entering a more globalized environment where economies are going to be prospering and working together, and there's not going to be any conflicts and geopolitically. I
Right.
mean,
And politicians will be
why are
responsible
you
and cut
laughing?
down.
I mean,
And politicians will be responsible and reduce their
I'm
spending, right?
I'm
Well,
serious.
well,
Uh,
yeah, let's bring us back to the realm of reality here. Unfortunately, Tavi, I know we're running out of time with you, and we have to let you go. One question and then another question. I have to ask if there are any miners in particular that you're looking at. I'm not sure if you can give me that answer because of compliance, but I have to ask: can you give us any mining companies listed that you're keeping an eye on?
Okay, since I have to be careful because it's for compliance reasons, especially because a lot of times we invest in companies that are very small, and so we can um, even us that are small, we can have an impact on prices. I'm going to say one that I think it's more institutional for the things that we invest in. Of course, institutions are looking for things that are a lot higher. Welcome to the mining industry. Everything is so cheap that have very low market cap. I really like Osisko Development for many reasons. I think not only it's a company that is probably going to get into production in the next 2 years, it's a team that has done it in the past and will probably do it again. They're completely cashed up, and they have all they need to get into production in terms of building the mine. Their production is they've got about 10 years of mine life, and the way it's modeled, but everyone is looking at this as a development story when actually I think it's got a lot of embedded exploration potential that could take this to a whole another degree in terms of valuation. So you've got kind of the a lot of spots. It's a company that is in development, potentially production in a few years. It will be producing most likely a very cheap cost, so it's not going to be a high cost mine. And a team that will most likely be able to do it. And in fact, we were part of the latest financing, and know a lot of the parties that are involved in coming into to make sure that they have the right amount of capital to move this forward. So
Right.
I think it's a really intriguing opportunity.
Okay. I know you have thoughts on emerging markets. We'll have to get those from you next time we chat. Tavi, as we wrap up here, give me your final thoughts, your point of highest conviction at the moment.
Highest conviction. Well, it has to be silver right now, but I love emerging markets. I feel like emerging markets are exactly where we were with mining a few years back before this major move, and nobody's looking at it. And everyone is looking at the wave of gold that hit us, and then they're looking at the next wave, which is miners, and everybody can see it because they're moving. But no one is looking behind that wave, which is the emerging markets wave that comes usually after gold, silver, miners, and so forth, because we're all exercising an idea of accepting risk. And we accepted the risk of investing in gold. We're now feeling more comfortable investing in silver. Therefore, if silver is moving, and then we start taking operational risk and looking at the miners. And eventually we go down and say, well, what are the things that are, not structurally as nice, politically speaking, and have a bunch of issues, but are really cheap and actually benefit from commodity prices rising? Emerging markets. And so I think it's a matter of time for that to also become its own wave. And it's going to be very, very interesting how that's going to develop, because I think it's going to be a lot of asymmetry here that is yet to play out.
Okay, we will have you back to break that down for us in detail, emerging markets and hard assets. Tavi, for those that want to learn more about you, where can they find you?
They can find me on X at Tavi Costa, or LinkedIn, Tavi Costa as well, or in our website, Crescat.net, where you can read our letters and read about Crescat as well. But thanks again for having me. Appreciate it.
A pleasure. And everybody has been sharing some of your proprietary charts. So congratulations on that. Tavi, always a pleasure chatting with you. Thank you so much, Tavi Costa.
Thanks for having me.
And as always, thank you so much for watching. Please make sure to hit that subscribe button if you haven't already. Make sure to signal that you do want notifications of when our next videos drop. As always, feel free to leave your comments. We love hearing from you. So as I like to say, feel free to praise, whine, or just opine. We do read the comments and we do really enjoy getting them. From me, Michelle McCory, and the rest of the team, thank you so much for watching. We'll see you next time, and until then, stay sovereign.
This is The Real Story with Michelle McCory.